Thank you, Dan. Thank you, ladies and gentlemen, for your presence. And also thank you, all the MMI staff watching on TVs, for your support. This reporting period, the 6 months ending 31 December 2017, predates my appointment. I've only been with MMI for 3 weeks. In fact, this is my 15th working day, but it feels like 15 months. So I suppose that qualifies me to participate in the presentation of the results. As Dan pointed out, the three of us will present. I will, before I start with the formal presentation, maybe just make a few general points, touch on strategy, and then I'll deal with the retail results. And thereafter, Tinus will deal with all the other sort of group results. And as Dan said, Risto will deal with the financial results. On accepting the position and engaging with the MMI board in the process, and also after I actually had the opportunity to familiarize myself with the MMI strategy, I was happy that the strategy is sound. And it was also, it made sense for the board that, it's not a good time to revisit the strategy. So I think I can confirm that the strategy is in place. It's a strategy that was decided on some time ago and has been communicated. So my focus, initially at least, will really be on execution. I think, though, that it's probably maybe a good idea just to refresh the memories of the investment community of a number of important strategic resets that the board and the management at MMI decided on in the second half of 2017. I think the first important factor was that it was decided to refocus on the core South African operations. We have lost market share, and sort of our market presence diminished over the last number of years. And it was, particularly as far as footprint and a presence in distribution channels, that certain targets and objectives were set. It was also decided to cut back on our African ambitions. It was communicated some time ago that MMI will, in fact, focus on a selected number of African countries, those countries where we are either already profitable or very promising, and they will exit the remainder of the African countries. And the same, more or less, as far as our UK presence is concerned. We're going to basically exit the UK retail market and cut back on the UK presence. I think all these strategic resets is probably indicative of respect for shareholder capital. And I thought, just in case you wondered what my position is on shareholder capital, I'd like to assure you that respect for shareholder capital, is sort of ingrained in my genes, in my DNA. As mentioned, my focus initially certainly will be on execution. I think, my focus will therefore be a lot on how we do things rather than what we do. And I thought it might be interesting for you if I maybe just share with you some of the changes that I'd actually like to see and start focus on in the initial period at least. I think first of all I'd like to see MMI almost behave more like a business and less like a corporate. I think it's very important that we become more commercial in our thinking and in our decision making. And I will actively engage and participate with a wide spectrum of the MMI leadership in order to drive this culture change. I think to maybe explain it slightly differently, I'd like to follow an approach where head office reaches out to business units rather than the other way around. You will also know that in terms of our strategy, that client centricity is one of the core themes, which I fully endorse. But I think it's important, to make it real. And I think it's also important for the whole MMI group to have, more of a sort of almost an outward-looking focus, to really be in touch with the market. I think we've got to find ways and means of making client centricity much more real. And the whole group should really, almost see themselves as a client-centric sales organization. It's very important that all the support areas really understand, that the battles fought out there, by client-facing staff, and that's what should receive most attention. Those of you that are familiar maybe with the detail around the MMI structure will know that it's a pretty complex matrix structure that was implemented a number of years ago. There's no doubt in my mind that that structure hampers implementation. So we'll be looking at streamlining the structure. I think it's very important that business leaders be given more almost like end-to-end responsibilities, and also to then empower the business leaders and really give them the authority to make decisions and act. Finally, as a sort of a fourth point that I'd really like to actively promote, is that we need to become more competitive. In the end, it's really about establishing and maintaining competitive advantages and eliminating or avoiding competitive disadvantages. And we'll have to do this on a wide front. It might be, in some areas a product competitive issue, in other areas it might be service related, some areas it might be sort of client interfacing, digital solutions, whatever it is. But we need to, really, I think, get to a point where there's continuous improvement. And I would be very happy with small wins as long as there are enough of them. A word of caution, however, I think a big insurance group like MMI Holdings resembles an oil tanker. Even if there's a sort of a new rudder order from the captain of the ship, it takes a while before the vessel will change direction. That might apply to us, but change we will. And it's very important that, but I think it's important almost from a management of expectations point of view to realize that we'll take it sort of a day at a time. Just finally, in this sort of introduction, with my interactions with staff and management generally, I've really been impressed with the quality of the staff in the wider group, and especially by their loyalty and commitment. I think there's a realization among staff generally that MMI have not really delivered up to expectations the last number of years perhaps, but we're determined to set the record straight. I will now move over to the retail business update. If we just quickly look at what we set out to achieve in the long term, and these were shared at the annual results presentation in, after the June 2017 results. As far as momentum retail is concerned, the focus was on increasing market share, and in particular winning back IFA support. Certain targets were also set in terms of growing the agency force, basically doubling the agency force over a number of years. Although we've got a broad product set, there were still opportunity to broaden it further. Plus, I think the more important challenge is to increase the product holding per client, the whole cross-selling aspect. And it's obvious, that MMI need to invest more in technology. As far as metropolitan retail is concerned, we basically set a target to also increase our market share, but to do that at improved margins. Productivity was a concern, especially if benchmarked against our important competitors. And then also there, digital solutions was high on the agenda. Now, in the retail feedback, Risto will pull it all together, from a numbers point of view, So this part of the presentation is really just picking a number of highlights, and pointing out maybe some of the things we're very proud of that we achieved over the last 6 months. And I'll do that sort of by referring and referencing it to the different sort of product solution components that we do offer at MMI. And we're starting with the first theme, which is, which one is this? Client centricity, yes. I think we're very proud of our turnaround times at Metropolitan Retail as far as funeral claims are concerned. You will note there that, very good results or turnaround time 6 months ago of 79%. Same day claim payments have improved even further, and that 90% of funeral claims are paid within 24 hours. And I, actually visited the area at Park du Cap in Metropolitan when I was there, a short while ago, where they're obviously very proud of what they do. Interesting thing is we're actually tapping into other databases now where we in fact know about deaths, even sometimes before we received a death claim. So that's really proactive, and I think a good example of client centricity. We've launched Save Days in November 2017. It's an app-based telematics solution for Momentum short-term insurance. Those of you that know the active days concept in Multiply, where health and Myriad clients earn sort of points that eventually lead to premium reductions. It's a similar concept in the short-term space where Save Days actually earn our clients some points. There's been a fairly good uptake. We've got 20,000 active clients on Save Days as we speak. We're very proud of the guaranteed investment product that was launched. This was also done in November 2017, and in the short period since the launch, we've actually had inflows of almost 600 million. This is really, I think, a nice example of a very competitive products. We benchmark it on a daily and weekly basis, and it's really a very, very competitive product. Moving on to growth. As we alluded to earlier, there was a firm intention to grow our footprint, and I'm happy to report that we actually see good progress there. Compared to a year ago, we've got 11%, the agent numbers have grown by 11%. Momentum Consult, which are really brokers operating under the Momentum brand, they from a albeit low base, we've seen a 26% increase in the number of Momentum Consult advisors. And then supporting IFAs, where we've got a minimum support level for a broker, to really qualify as a supporting IFA, we've seen a growth of 13%. And I think, that's fair progress, to date for us, and it sort of puts us on track for the longer term objectives. Momentum short term, you'll see it's a bit of a recurring positive story right through the presentation, but there, as far as their sales are concerned, excellent progress in actually establishing themselves, through the Momentum agents, where the year-on-year production more than doubled. The number of supporting IFAs also more than doubled. From IFAs, the number policy count increased by 37%, and even direct business showed a very promising growth of 20%. You will also know that through our JV with African Bank, that's another attempt an opportunity to increase our footprint, and we do that under the Metropolitan banner. You'll see on the slide there that Metropolitan sort of as a brand is rolled out, and there's a presence of Metropolitan brand in a number of African Bank branches, and the plan is to roll it out to all of them. At the moment, we've got a presence in almost 180 branches out of a total of 310. And this also, the proper rollout started in August 2017, and over the short period, which, I think it's sort of fair and was to be expected that there would have been some growing pains and testing and stuff, but we're very happy that almost 6,000 policies have been issued at the annual premium equivalent of 17.7 million. As far as lending is concerned, and that's sort of into the insurance client base, a lending product, African Bank lending product into the, at this point, only still in the metropolitan client base. It's really sort of a bit of a pilot at this stage, but we've already seen, that there were 260 odd loans to a value of 23 million. The final section, on the retail sort of feedback is around excellence, and the few examples I'd like to highlight here. First of all is our improved productivity in metropolitan retail. The top half of the slide gives you an indication of the number of regions, and that's out of a total of about 30 that meet the minimum standard of productivity, which is 2 policies per agent per week. And the bottom half shows the same for branches, the number of branches, and that's out of a total of 400 branches. So I think, for me, there are 2 aspects to, positive aspects to this slide. First of all, it's a very positive trend, but secondly, there's room for further improvement. During the 6-month period, we also launched sort of a consolidated Momentum app, where all the Momentum products are now captured and accessible by our clients on the app. So you can look at your multiply points, you can look at your values or what your investment or whatever, all on consolidated in the one app, which is also I think quite a nice feature. We're very happy that we managed to put it out recently. Finally, again, as I said, Momentum short-term insurance was a star over the last 6 months. In this slide, we illustrate the improvement in the claims ratio. It's down from sort of 100, close to 100% in 2015, and it's now in the low 75s. And the last 6 months was in spite of quite a bad experience from hail, a severe hailstorm in October, which I suppose will happen from time to time. But also, as the sort of trend of claims improve, you will see in terms of profitability, as we get a little bit of scale, it's also actually showing excellent improvements. I think, to sum up on the retail side, what have we achieved? We shared with you the increase in the metropolitan agent productivity. We've showed you the Momentum footprint expansion. I think we, finding good traction on the African Bank partnership. Very solid performance from Momentum short-term insurance. And, happy to say a few positives in terms of, product and solutions that we launched over the 6-month period. In terms of focus areas going forward, obviously we'll continue to focus on channel productivity and expanding the footprint. We need to invest more money in client experience, and a lot of that's got to do with digitization and improvement of systems. I think there's a real opportunity to promote our investment products. Tinus will, deal with investment performance in his presentation, but I think the Momentum investment performance is actually something that is like a little bit of a best-kept secret. And then finally, I alluded to it, but it's important to streamline our operating model and focus on the execution. I think that's it from me, and I'm going to hand over to Tinus. Thank you.